exclusive analysis. In today's video, we're discussing natural gas and oil, touching base on the energy market. Overall, natural gas had a pretty good week. The bulls should be impressed by the price action, and why I say that is because natural gas on the hourly chart basis has actually broken out of a little bit of a bullish pattern here. Here you have your left shoulder, your head, and your right shoulder. Your neckline is this down-sloping trend line. That is broken out clearly. You even got the back test on Friday, which held with a beautiful hourly bottoming tail on volume. So this suggests that the upside momentum in nat gas, just based off of the smaller term price action, should give us roughly another 10% move, pushing nat gas up to about $2.01. So retesting that whole $2 number is the next intraday upside target, as long as you remain above this downsloping neckline. If you lose this neckline on an hourly chart close, it does open up the probabilities of a move back down to 167. So just keep that level of support on your chart as we enter the next phase of the week. Now, looking at the daily chart of nat gas is super impressive. Let me just clean up some of these lines, and just full disclosure, we remain long UNG, accumulating a core swing long position. I'm expecting further upside, but don't take my word for granted. Let's just look at this price action and technical chart setup. Overall, remember we discussed last week that nat gas needs to get a weekly close or a daily close back above this massive supply zone. This is where nat gas had a weekly chart gap up and an impulse breakout move. So I said, as long as nat gas remains above that 186 level on a daily or weekly chart basis, it does open up the chances of a short squeeze to continue all the way up to 225. I still have that same thesis, and I still think that based off of nat gas closing basically right on that trend line or just slightly above, we still have a scenario where we could squeeze higher on nat gas. Another factor that makes me short-term more bullish on nat gas, take a look at the 20-day moving average in blue and the 7 moving average in yellow. We got that bullish crossover on the Thursday candle, and Friday's candle ended up seeing some sell-side pressure, but you still held above the moving averages. So that's a short-term bullish sign. Whenever you get the 7 intersecting with the 20 moving average, that typically yields more upside. Just like it yielded downside over here, just like it yielded upside over here, just like the bearish cross yielded downside over here. Whenever you get that short-term moving averages starting to curl to the upside and intersect with each other, and price actions holding and consolidating, that sets up for a recipe of success in the nat gas market. I still think we have about a 20%, 21% upside move at the minimum that could happen over the course of even 1 to 2 weeks. I think natural gas has a tendency to make explosive moves in both directions that typically catches people off guard. To support the higher natural gas price action, take a look at the natural gas equity stocks. AR, a nice move, putting in a bull flag on the daily chart. Same thing with EQT, another standout bull flag chart that is looking poised to continue higher. So when you have the natural gas equities also showing signs of strength, that's a positive sign. You always want to see those equities leading the underlying natural gas price action. We remain long with members on UNG. We have a half a position accumulated, and I still think, based off of how oversold UNG is, it would not surprise me over the next 6 to 12 months for UNG to trade back all the way up to the high end of this channel. Remember, this channel is a down-sloping channel, but UNG could easily push well above $30 in the next 6 to 12 months. Let's look at oil. Oil is another very interesting chart. On the weekly chart of oil, you've now officially had a breakout. That means higher oil prices, not a good sign for consumers, not a good sign for the S&P 500 stocks, not a good sign for transport stocks, miners across the board. Oil influences everything, and not a good sign for the inflation fight. When you start really comparing the fact that oil's had a weekly chart breakout, getting a close above this heavy wide range red bar reversal, 2 upside targets now remain on oil, 84 and 90. If we head to $84 in the coming weeks, and then even $90 a barrel, what is that going to do to the inflation front? What is that going to do to interest rates? What is that going to put the Fed? Is it going to put the Feds back against the walls where they now have to come out more hawkish and get a tamper on equities. And this price action in oil came on very, very weak oil inventories off of this Wednesday report. So still very, very impressive. Still remaining long oil stocks, in my opinion, still have an inverted head and shoulders that is looking likely to take you higher. On that note, thank you all for tuning in. If you're interested in how I'm trading some of these commodities, definitely check out my website at tradingcapital.ca. Take care, buddy. Please give this video a like down below.